More now on that developing story out of Europe. Joining us now is Halpenny. He's the European head of currency research at the Bank of Tokyo-Mitsubishi. Derek, you're earning your keep today. Plenty of headlines to be digesting. Let's start with Ireland. Bloomberg reporting that Ireland is in talks for a bailout of their banks and for the government, but they're not asking for the money right now. How has that changed the picture for you?
Well, I think the key issue right now is to eliminate uncertainty as quickly as possible. I think the problem that potentially could come from this is that Ireland feels it's in a relatively strong position for a country that clearly needs financial aid. That being that they do have surplus cash, that means they don't have to go to the bond market at the moment.
Right.
So in effect, it doesn't really matter what happens to the Irish bond market. It's irrelevant. But of course, we are getting to a situation where the Irish banks are looking extremely fragile and in all likelihood would need assistance before the government would have to go back to the bond market. So I think at some point they would need some kind of bailout. But because it's not of imminent need, like, for example, what happened in Greece, there is a period we're in now where Ireland potentially is in a relatively strong bargaining position and could be pushing to try and ensure that any details and conditions in regard to a bailout fund is not as, or are not as severe as, say, they were for Greece.
And specifically there's a lot of concern about the corporate tax rate in Ireland. I mean, that's key to this government's economic strategy. What else would they give up if they accept this help?
Well, you know, you're right in terms of what's crucial, in terms of what's needed to be kept. The other aspect, which of course is extremely difficult, is the pain in which the Irish taxpayer has already undergone and is about to go under further stress. So it's very difficult to pinpoint exactly what would take place to present a more severe fiscal consolidation plan that's already in place.
So Ireland is not Greece, two different situations, but they're all part of the same neighborhood that's all interlinked right now. I mean, is helping out Ireland, or even just saying we've got a plan in place should they need it, enough? There are a lot of concerns right now about Portugal as well. Are we looking at contagion?
We are, absolutely. I think that's one of the crucial problems that's becoming clearer by the moment. Even if you go back to Greece, we've had data from Greece this week that shows that the debt situation and the fiscal consolidation isn't going according to plan.
Right. Austria is saying that they're not going to be helping out because Greece isn't meeting those financial commitments, according to Austrian TV.
Exactly, and if you consider the money that's been put in place to protect Greece, 110 billion, 80 from Europe and 30 from the IMF, and when you look at the debt markets there, you can see that investors are still concerned about what would take place in the aftermath of this loan program, in other words, beyond 3 years. And of course, the comments from Merkel and the plans that have been put in place for bondholders to suffer beyond 2013 makes the likelihood of Greece needing further help down the road all the more likely.
But it seems like we're still talking about the same centrifugal forces here, but the Eurozone not being on the same page because there are sovereign governments involved. I mean, what has actually changed? Is there a chance that the market is truly overreacting?
Well, you know, my personal take, and we've been bearish on the euro during a lot of the period when the euro was rallying against the dollar. And I think simply after the plan was put in place after the crisis in regard to Greece, the focus in the FX market shifted, and we moved across to weak economic data from the United States and the speculation in regard to quantitative easing too from the Fed. That's passed, and quite clearly the evidence from Europe suggests that the plan that was put in place earlier this year may not be enough. And importantly, Spain in all of this is crucial, because the EFSF fund the credibility of that fund could diminish rapidly if Spain is viewed as needing help.
That's a big question mark. Derek, thank you for your perspective.